Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the areas of the market that's been under an incredible amount of pressure recently has been residential solar companies. Despite the fact that there's increasing subsidies, there's improved economics for things like batteries, the solar companies themselves have done extremely poorly. A lot of them are down 60% or more in the past year. So I want to go through the performance and exactly what investors need to look for in the future. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And I want to start with showing the price chart for 4 of the more popular solar energy stocks. Now, this is a look at the stock price movement for Enphase in blue, SolarEdge in purple, SunPower in orange, and Sunrun in black. You can see that Sunrun and SunPower are down over 60%. SolarEdge and Enphase are down between 50 and 60%. The real driver for this decline in each of these companies is the fact that residential solar is becoming harder and harder to finance. And that comes down to rising interest rates. When any company installs solar on somebody's roof, typically there are 3 options for financing that project. You can just pay with cash. So that could be $30,000, $40,000 outlay of cash. You can finance that with a power purchase agreement or lease. That's an agreement over a course of 20 or 30 years to say, okay, you're going to save me $100 on my electricity bill. I will pay you $80 or $90 to lease or buy power from this power system that's on my roof, and I don't have to put any money up front. That's what Sunrun and SunPower do with their power purchase agreements. And the final option is a loan. So that's just a typical loan. Again, if it's a $30,000 purchase, you would get a loan that would come with a monthly payment, and then you would take the cost savings to offset that. As a result, these are long-term financing projects. So as interest rates go up, the cost to finance them increases as well. This is a lot like a mortgage. I'm sure you have heard a lot about mortgage costs going up significantly over the past year. The same thing is happening for solar energy projects. So that's why Sunrun and SunPower are down. The effect on SolarEdge and Enphase is that something in the supply chain needs to get squeezed to reduce those upfront costs. One of the most expensive components of a solar installation is the power optimizer and the inverter. That's what those 2 companies make. So if you're Sunrun or SunPower, where are you going to put pressure? Well, you have to put pressure on those components because something like a solar panel itself is going to be a commodity, not something you're going to be able to get much lower pricing on. The question right now is whether or not a recovery is on the horizon at any point. And I think there are some positive signs for the industry and for the economics of solar in general. We are seeing more batteries being installed with solar systems. So that gives more revenue opportunities for all 4 of these companies. There are also strong subsidies or incentives to help lower the costs for installers and for homeowners. That's a partial offset to those rising interest rates. So not something that's going to drive the industry completely, but is definitely a tailwind. And then there's ultimately going to be an adjustment in the pricing for a lot of these systems. We're going to have to see some of the component costs come down. We do know that electricity costs, that's really the competitor to solar energy that's on someone's roof. Electricity costs continue to go up. So the competition is increasing in cost. It just hasn't yet been offset with reduced financing costs for a lot of these installers. So long term, I think all 4 of these companies are going to be fine because they have leading positions in the industry. This is not an industry that is going through major turmoil, but they're going to have to adjust their pricing, and we're going to have to see how that plays out. And right now, the market just isn't interested in bidding up companies that are having margins decline and have pressure on both revenue and profitability. But I think in time that's going to change because solar continues to grow, whether it's in the US or abroad. Efficiency continues to go up. Costs at least are stable, if not coming down. And that should be tailwinds for the industry, especially as utility costs go up. So I think the future is solid. Maybe time to start dollar cost averaging into some of these stocks or a basket of these stocks. But absolutely has not been a good year for the solar industry over the past year, at least on the residential side of things. But what do you think about the future of residential solar? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing on YouTube. Thanks for watching, everybody. See you here next time.